In a twist that has caught the attention of both seasoned investors and newcomers alike, Chinese stocks are reclaiming their position as market leaders. But here's where it gets controversial. Could this resurgence be short-lived? A closer look at the factors driving this trend reveals potential risks that might derail their upward trajectory. If you're wondering why this matters to you, or whether you should care, stick around. This is the part most people miss when they jump into trends without understanding the underlying vulnerabilities. Let's break it down in simple terms. When we say market leadership, we're talking about how certain stocks outperform others during a given period. In recent weeks, Chinese equities have been showing impressive gains, fueled by government stimulus measures, optimism surrounding economic reforms, and global demand for tech innovation from China-based companies. Sounds promising, right? However, there's an important caveat. These gains often come with strings attached. External pressures such as geopolitical tensions, regulatory crackdowns, or unexpected shifts in global trade dynamics can quickly reverse progress. For instance, consider the ongoing US-China trade relations. While things may seem stable now, history reminds us that even minor policy changes can send shockwaves through financial markets. And others warn that over-reliance on state intervention could backfire, leading to inefficiencies or inflated asset prices. Which side do you lean toward? Is this truly the start of a golden era for Chinese stocks, or are we setting ourselves up for disappointment? Before making any investment decisions, it's crucial to remember one fundamental truth. Past performance does not guarantee future results. Just because Chinese stocks are performing well today doesn't mean they'll continue to do so indefinitely. Moreover, information available through platforms like Investors Business Daily, IBD, serves as a valuable resource, but only if used wisely. The data provided, including real-time pricing, ownership metrics, and analyst estimates, is intended for educational purposes rather than definitive advice. Always double-check sources and consult professionals before committing your hard-earned money. To give credit where it's due, much of the content shared by IBD comes from reputable providers like LSEG and FactSet. Yet, no system is foolproof. Accuracy, timeliness, and relevance depend on various factors beyond anyone's control. So while tools like Nasdaq Last Sale provide near instantaneous updates on stock movements across multiple exchanges, keep in mind that not all markets contribute equally to these figures. Does this mean you should avoid using such resources altogether? Not necessarily, but approach them with healthy skepticism. Finally, let's talk ethics. As readers, we must acknowledge that authors or presenters discussing specific stocks might personally own shares in those companies. This isn't inherently bad. It just means transparency matters more than ever. Are they sharing insights purely for educational purposes, or could there be ulterior motives at play? It's worth asking yourself this question every time you consume financial content online. So what's your take? Do you believe Chinese stocks will maintain their dominance, or are you wary of potential pitfalls ahead? Share your thoughts in the comments below. We'd love to hear different perspectives.